in the golden days of the Wild West, it was a lawless land. There were no police, there were no marshals or deputies. There was just chaos and lawlessness. Okay, so you have these gangs, right? The James gang and all these guys, they just ran amok. They took advantage of people. They cut corners. They were staging heists on anything, and they got away with it until they didn't. What happened in response to that was that vigilantes would rise up. These actors who wanted to fight these guys, but they were being compensated, so they would work with the government and work with other people because the long arm of the law wasn't that long back then, and so they would be compensated for these bounties. Well, after some time, the government then eventually established a foothold in each one of these territories, in the towns and the cities and the saloons and all that kind of stuff. Well, why were they taking their sweet time? Why didn't they just do that immediately? Why isn't the first thing to do? Well, because it was in a mode of exploration. And to stamp order, they didn't feel the need to pull the trigger until one catalyst. Not really a catalyst, but really this figure. The figure was the body count. The body count just started rising. These people were just, these bad actors, these shady people were just racking up the body counts. People were feeling unsafe. These guys were getting away with whatever they wanted to get away. This is some Red Dead Redemption stuff, okay? And so that's what was happening. There was forward pressure on the government to establish more law and order into the Wild West. And that is what we are seeing in the Wild West of crypto, okay? Let it not be forgotten that we are still in unregulated territories. And the only people right now are like people trying to do well-meaning. They don't have the real funding or support. These are vigilantes. But there are a lot more people who are taking advantage of a financial system that has no guardrails in it. The crypto market is like a financial system, and there are a ton of guardrails in our traditional financial systems and stock markets and all these things, but there are none here. I mean, you could do some crazy stuff. So what I want to do in this video is I want to rack up the body count in the last couple months, connect all the dots for you and I, and then see where this is going. And I want to kind of paint a bigger picture of all this, and then what you and I should be doing and how we should be conducting ourselves in this bear market, especially when I think a tsunami of regulation is coming probably within the next year. I would say next year to 3 years if I were to be a guessing person. Now, if you're new to this channel, my name is Aaron. I'm on a journey to my next Bitcoin while helping you to your next Bitcoin. Not your financial advisor, just a Wild West cowboy, lizard brain cowboy out here exploring. And I want to help you and help me stay more in the know, stay more like, okay, what the heck is going on here? I want to be a smarter and better investor, and I hope you're along with me in the journey. So hit the subscribe button down below. Give me a like button on this video if you're feeling very generous or whatever. And so let's just get right into this thing. This was the first real big body. Of course, there were some smaller insolvencies, but really what kicked off, in my opinion, in this latest trend of just bodies being racked up was the collapse of Terra Luna, okay? So this is the Terra Luna fall, and this was done like around May, and we all know this. I'm not gonna belabor this, but this is when it just crashed. So Luna went from like over $100 a coin to like 0.001 of a coin, which is it's crazy. Yeah, right here, like below a penny. And so this made a lot of people broke, poor. Some people committed suicide. Some people didn't see a way out, which is very unfortunate. And I think, I don't know all the intrinsics here. There are other great YouTubers and analysts who kind of break this down much better than I would. But I just wanted to rack up the body count. This was one of them that really set forth, because a lot of people love like Terra Luna. It was like top 50, it was a top 50 coin. And so this was a trusted coin, a trusted project, and then it just went bottom up real quick. I mean, in an instant. Now, what happens here is that in response to this shock, okay, because it's such a big shock and the crypto markets are so small, Binance starts to halt Bitcoin withdrawals, and so they didn't do it for a long time, but in my opinion, when a company starts halting withdrawals, you have lost it all, okay? You have lost your ever-loving mind and your user base, because once you unlock that ability, because you have to, right? You can't lock people out of their funds for forever. Once you unlock that, they're withdrawing everything, and then they're leaving, unless you have some like crazy incentive. But I don't think this is the market for that. I don't think people will buy that. So Binance halted withdrawals, and you can see here this is June 13. So this is like in response to this. After that, Celsius moves to halt crypto withdrawals, catches the Washington's eye, and this is really good. Okay, so let's just take this first part. Celsius halts the crypto withdrawals. Like I said, like if you're an app, you're this project, and you stop people from getting access to their funds, you've got a massive problem. You've already just broken you've broken the trust there. You're saying, oh, due to market craziness, we can't do this anymore, and so you're preventing a bank run. You're preventing people to go in. Now, you might ask yourself, why would they stop this? Why would they stop people from withdrawing their funds? Because those funds have been loaned out on leverage. Those funds have been, they don't have them. They don't have them with them. So if everyone tried to withdraw the funds, there's nothing there. And then it's just going to go bad from there. So what happens when you start to loan these things out, you put your money into something like Celsius for the return, for like a 20% APY or whatever. You're getting 20% back, and you're like, this is incredible. I don't know anywhere else that's going to get you 20% return on your investment, guaranteed. You know what I mean? Like, but the savings account alone gives me like under 1% or something like that. You know, like 1.25% depending on the interest rates. But so 20% is mind blowing. So they do that because they want to take your money, take your crypto, and loan it out somewhere else, and then make a difference, arbitrage the difference on yield. Anyway, so Celsius halts that. And and the reason why is because people will run on them. They'll try to take their money off these exchanges. And so this is a small one. CoinFlex halts withdrawals amid extreme market conditions. Another one of these guys who is just halting withdrawals. Once they stop halting that stuff, it is going to be game over for them, unless they have some kind of backup. But it was a catch-22 for them, honestly. After that, crypto hedge fund 3 Arrows Capital plunges into liquidation as market crash takes toll. This is the end of June. This was just a few, maybe like a week ago. And we've seen this, right? 3 Arrows Capital, these guys who are over leveraged, who don't have any, they're just crashing, right? And they're taking some people with it. They borrowed money from Voyager, right? Voyager Digital. They borrowed money from them, and then as a result, Voyager issued a notice of default on Monday and said it plans to pursue recovery of funds through the legal system, had made 2 loans to 3 Arrows Capital. Well, now Voyager is in trouble, okay? Voyager loaned money to 3 Arrows, and Voyager now is in trouble. And so what happens here is Voyager just today filed for bankruptcy, okay? Voyager, and if you don't know what Voyager is, it's this, it's this crypto app, this exchange. It allows you to trade crypto, over 100 cryptos and stuff like that. So Voyager has filed for bankruptcy, and no doubt is because of the Luna crash. We're tracing that lineage here. Now, you might ask yourself, okay, what happens when Voyager goes bankrupt? What's it taking down with it? Well, I want you to see that Voyager had a 5-year partnership with the Dallas Mavericks. And so Mark Cuban, who is a billionaire, certified billionaire, he wanted people to invest with Voyager. He signed this deal, Voyager being the official NBA, what's called, official NBA crypto exchange. Sorry, I'm brain fog here. Exchange. But here's what happens. Dallas Mavericks fan fume at Mark Cuban over Voyager crypto bankruptcy. Okay, so they're saying that they're lashing out at the team's owner, Mark Cuban, for luring them to invest in this company. And so it's not like Mark Cuban, no, but this only happened, right, like October of last year. So like November, and so October, November. And so people are upset with him. Now, this is only one partnership. Was Voyager connected to a lot of other things? Of course, yeah, they were connected to the National Women's Soccer League, right? And they were connected to, this is the more National Women's Soccer League, as like their crypto payments. They were trying to receive crypto payments. They were partnered with Block Demon, and these guys are like a node-based, infrastructure company. And so what happens now is we're looking at the next thing is not that just Voyager is attached to all these things, but now we're seeing coordinated attacks from hedge funds onto things like Tether. And so you've got people, all these guys attacking each other, these juggernauts, just really slugging it out in the crypto space. Some people are being taken down along. Some people are leveraged too much. I mean, it's insane here. Now, what happens when trust is lost in an exchange? Trust is lost in a stable coin. The body count starts to rack up. Okay, these companies are being shaken out more than retail is being shaken out right now. People are just going insolvent. People are getting liquidated. So the body count is rising, and this is what's happening right now. This happened in June 14th, and there was a bill that is being drafted and being passed and being pushed by Senator Loomis and in Wyoming and I think New York, another one. And so there's starts to be some crypto regulation. But just today, we see that crypto regulation, not just today, but it's been in the works, but the European Union, right, is starting to land some real regulatory, regulations here. And it's very interesting. This landmark law, known as Markets in Crypto Assets, or MICA, is designed to make life tougher for numerous players in the crypto market, including exchanges and issuers of so-called stablecoins, tokens that are meant to be pegged to existing assets like the US dollar. Okay, under the new rules, stablecoins like Tether and Circle's USDC will be required to maintain ample reserves to meet redemption requests in the event of mass withdrawals. This is that run on banks that we were talking about. Stablecoins that become too large to also face being limited to 200 million euros in transactions per day. And so that's what we're talking about here. We're talking about making sure that there are guardrails for exchanges and issuers, these stablecoin issuers. There needs to be something. There needs to be something. I'm all for decentralization. I'm all for lower government. That's me. But what am I supposed to do here? These juggernauts are duking it out. They're all trying to like survive in this bear market as you and me. How are we supposed to trade? And I'm going to tell you, get into DeFi, okay? You've heard nothing about Uniswap, okay? You've heard nothing about Aave. Why? Because these are doing fine. These are doing just fine. Take your money, start trading on DeFi. Uniswap might be a little expensive because of gas fees. Right now, it's not that bad. I mean, gas fees are about under $2 right now on Ethereum. So you can make these trades, or you go to Binance Smart Chain or any of these other chains, in my opinion. And let's start trading on DeFi, not CeFi, not centralized finance. DeFi, decentralized finance. I mean, if you want to make some yield, Aave seems to be holding just fine. There's no news, which is what I like. Stability, right? And so you're gonna make like 0.5% back on your if you stake money in here, which is accurate. You know what I mean? Don't. Okay, here, look, I'm making 1.9% APY on my USDC. This is just when I was dabbling with it. This is what I was doing. I don't personally have a lot in Aave. I have more in other exchanges, but I do like Aave because of stability. It's something that I would recommend. I'm a cowboy. I just like going crazy with all this. But I even just keep my money in my wallets. Like, I'm not even using this. You don't have to. But if you want to earn yield, there's a lot of different ways you can do this. I would probably go to Cardano. I would probably go to Binance Smart Chain. I'd probably go into Ethereum, and I'd start trading DeFi. Why? Because these centralized exchanges, they don't have your best interest at heart. It's time we wake up. The party's over. 20% yield, 15% yield doesn't make sense. I'm seeing across the board, I'm big into the launch pads. Across the board, these launch pads are reducing their APYs. Everyone's reducing their APY. Why? Because the party was all up. The Fed was pumping liquidity into the market. Everyone was making money. Every random coin was shooting to the moon because there was so much money into the market. Now the Fed's tightening. Now everything's reducing. Everything's contracting. Just everything, every asset in the world is going to be worth less because there is less money in the whole economy, the global economy. So what should you and I do? What can I recommend? Look, I'm not your financial advisor. I'm just a cowboy. But this cowboy does not ride on central exchanges. I know that Binance removed all fees on trading Bitcoin. That's fine. Pay the fees. Pay the gas fees on decentralized finance because I don't like being on there. I don't like being on decentralized finances anymore. Anyways, guys, let me know what you think about CeFi, DeFi down in the comment section below, and I'll see you in the next video.